Know the difference with Annex Wealth Management? It is time for Ask Annex. We recently had a couple of questions about advice seen on TikTok, the wildly popular, somewhat controversial social media platform that is owned by a Chinese company that may or may not be feeding back data to their government. People go to TikTok for all kinds of advice, but should you take financial planning advice from it? I found a list of the worst financial advice headlines on TikTok and thought I'd run them by our guests on the show today. Sarah Kyle, Wealth Manager, Annex Wealth Management. Hello.
Hello, Danny.
Got to admit, are you on TikTok?
No.
All right. Matt Morsey, Investment Team Manager, CFP at Annex Wealth Management.
Hey, Danny. And I'm not on it either.
I figured you were not. All right. I was, and I'm off. It's so addicting. Let's roll through some of these TikTok advice headlines and see what you guys think of them. Here's one. Max out your 401k could be the dumbest advice.
This is one of those where, it depends on the person, I think. For some people, that's the smartest thing they could do, is to force that money into the 401k for the retirement spending, down the road. But there's also other ways to save too, which would make somebody not want to max it out, whether it's a Roth 401k version, whether it's taxable savings, whether or not they need money in the short term versus the long term makes that decision, personal.
And, we've always said that tax diversification is just as important as asset diversification. So you got to just check out your situation and where are you on the three buckets that we always talk about, the tax now, the tax later, the tax never bucket. We like to have that nice tax diversification. So like Matt said, everybody's different and you should seek your wealth advisor for information.
I think the investment options, matter within this as well, too. You certainly want to be able to put in at least as much as to get that employer match if that's available to you. But if the investment options that are in that 401k are not great, there's better ways to save than outside of that.
Exactly.
TikTok advice headlines. How to make $1 million or more with very little effort.
What was their answer? I'd like to know.
I don't know. All I found was the worst headlines.
I just played the lottery and I didn't win, which is why I'm still here. So I'd really like to know how to make that with little to no effort.
As would I.
Here's one. I see a stock going up and I buy it.
Yeah, for some people, that's what's called trend following. And if the stock's going up, that's a bullish sign and they'll want to buy more. Likewise, if it's going down, they want to sell and get out. But it certainly is a lot easier to say that than actually do that. And to be able to know clearly what that person thinks is to know what's going to happen ahead of time.
And the COVID days in 2020, when we had the stock market going up like crazy, all you had to do is wake up and the stocks were going up that day. So those 23 million new investors that came into the market really got a learning lesson that things don't always go up.
Bad financial advice from TikTok, some headlines. The person names the company here, but I'll just say XXX could reach $100,000 per share or more. And I checked, it's currently under $4 a share.
Well, that's a long way to go. That's for sure. You see those things and you usually say that there's a price on a stock for a reason. Now, the price is somewhat subjective based on how many shares and the size of the company and all of that. But if something's trading at a couple dollars a share, chances are it's not going to hit that $100,000, but you sure like that optimism.
Yeah, and before you put that $100,000 price target on that, you might want to check the balance sheet and see how much money they actually make and how much debt they actually have. It's pretty interesting.
Here's one. Buy what rich investors buy.
Yeah, there's lots of books that are out there that describe how certain investors, invest their own money, whether they're rich already or they're a professional investor. Generally when they're writing those books and they're giving away what their so-called secrets are, they're probably either not that secret or that secret's going to go away and other people are going to do it. So it's hard to really replicate what they're doing. The other problem too is that generally when people have sizable net worths, they have access to investments that not everybody else has as well too. They would be called an accredited investor. And so they're able to get into hedge funds or private equity, or maybe they're in different private deals that the average person doesn't have. So it's hard to replicate that.
Yeah, and they also have a higher risk tolerance. Maybe they can afford to have a stock go down 10% and still be okay. And maybe they can afford to stay in the market and invest in something that may not give them a return for 3-4 years, where an individual investor who's not an accredited investor might not have that flexibility.
Here's the last from a list of the worst financial advice headlines on TikTok. Invest with cryptocurrency using a loan.
Well, that's not going well this last year or so, that's for sure.
Do people borrow money to invest?
Oh, for sure. Within an investment account, it's called borrowing on margin or using margin. So you're paying, an interest back to that custodian where you have those assets in order to leverage your investments, which obviously if things are going well, you're leveraging that upside and getting a higher return on it. But it can get out of hand in a hurry. And certainly in times like we've seen over the last year or in the financial crisis, you can end up losing more money than you actually put in the first place.
I remember in the dot-com days in the year 2000 and also the great financial crisis, people were mortgaging their homes to put money in the market when it was going up. So it can be, like you said, it can get out of hand really quickly.